numbers just crossing the wire. Talk to us, of course, sort of what sticks out to you, the vehicle deliveries, the focus on the China revenue growth. What do you make of these numbers?
So Tesla says we have the capacity installed to produce and deliver 500,000 vehicles this year. While achieving this goal has become more difficult, delivering 500,000 vehicles in 2020 remains our target. I think analysts across the street saw that as being a bit of a heavy lift for Tesla going into the fourth quarter. They will have to deliver 180,000. But look, like one of the big takeaways from the whole pandemic period, basically, is that Tesla has got better at manufacturing vehicles. I don't think the profit number was a surprise, given the record delivery last quarter. We also know that there's higher margins on the China-built Model 3s, for example, as well. Regulatory credits once again played a role here. If you look at the number, I think it's coming in at around 350 million for that regulatory credit revenue. And that's what analysts want to know, and I think we'll address it more on the call going forward, is Tesla going to be consistently profitable on an ongoing basis if you strip out those regulatory credits? Our colleague Kevin Tynan, Bloomberg Intelligence, has been talking about this on the blog. If you take GM, for example, as they catch up in electrification, the idea is not about them taking market share, but as they expand their capacity quickly, we know that GM's got this great command of the supply chain, they're simply not going to need to buy regulatory credits. FCA, Fiat Chrysler, yes, they're a bit slow off the mark with electrification, but eventually there won't be a need for them to buy them. And so the question is, will Tesla be profitable just from building vehicles?
Yeah, and so, I mean, the other issue that's sort of standing out there, Ed, was, of course, the liquidity issue. I mean, it does appear that cash flow is in a pretty healthy position, and that maybe buys Tesla a little bit more time and a little bit more grace with investors.
Right, but investors will look along beyond this quarter as well. Elon Musk put the narrative around this company firmly on growth, right? And it's not just about growing, the audience of Tesla users around the world, but in Shanghai, they want to expand to the Model Y line there. They're building a factory in Berlin to service local European demand. They want to get this factory done in Austin to bring the Cybertruck online, expand the portfolio of products, grow the addressable market, and that all takes money. One of the advantages that analysts talk about time and again with Tesla is their cost of capital advantage. The run-up in the shares this year, which has been extraordinary compared with some of their automotive rivals, gives them that cost of capital advantage. But also, analysts have been calling on Tesla to deploy that capital. So we'll be wanting to hear a narrative and commentary around CapEx about where that pace of growth is going to come from. And then there's the demand question. The tactic used during the pandemic period has been price cuts, both in China and in the US. US is the more mature market, but we've not really seen any revenue growth there for some quarters now. So what's going to drive demand? It's early adopters, right, that are buying electric vehicles in North America and in China as well. So when are we going to make this sort of a broader shift to electrification and EV adoption from those consumers? I think those are all topics that are going to come up on the call, as well as full self-driving. When is Tesla going to actually act on this narrative around autonomy and this lead, which it has sort of hinted at for some quarters now that it has?
And of course, many wanting to know about this Cybertruck here, Ed. We've all been looking at the GM Hummer and re-watching how it takes certain hills. But really, this is going to be an area of focus. You mentioned the Model Y, how that's coming online in Shanghai. But we're going to look at the Cybertruck too, hey?
Yeah, this is an area I'm really focused on because you just have to think about what Americans are buying right now. Almost 80% of purchases of new passenger cars are light trucks. That's a pickup truck or a large SUV. But if you look at what's out there in the range of EVs available for you to go and buy today, they're all sedans and hatchbacks. And it doesn't really align with what consumers are looking for in a vehicle. The golden rule of electric vehicles is price parity and performance. The electric vehicle has to cost the same as a traditional combustion engine car, and it has to be able to do the same. And I think it's really interesting to see General Motors focus first on the Hummer EV, the Cadillac Lyriq, and then you have Ford talking about electrifying the F-150, Rivian bringing its R1T pickup to market. Those are more in line with what consumers in the US want. And electrification in the US is behind the curve when you compare it with China and Europe, where sedans and hatchbacks are more prominent, but then Tesla has more competition in those markets with a broader range of models from rivals.